Back to the present, the local stock market, and it's been a bad start to the week. For his thoughts, I spoke with Charlie Aitken from Bell Potter. Charlie Aitken, across the board selling, and banks and resources worst hit. Is it all about these weak US employment figures?
Partially, Tiki. It was a bad day. ASX 200 down 100 points, 2 and a bit percent. The Asian markets were down as well, so it wasn't just Australia today. You know, Kospi, Straits Times, Hang Seng all down 3 or 4%. But look, the employment number was a shocker in America. There's no doubt at all. You know, to create no jobs in August in America was well below anyone's expectations. And of course, the market's reacted as it would to the fears of a double dip recession in America, and that's why the sell-off is broad today.
We've got the visit of the European Commission President, Jose Barroso. Now, he says he's not expecting a recession in Europe. I suppose he would say that, wouldn't he? But is that any comfort for investors?
That's a ridiculous statement, Tiki, and he knows it. I mean, Europe's the biggest problem in the markets at the moment. If Europe's not in a recession right now, it's about to be in one. Obviously, there's concerns about bank funding in the Eurozone. You've seen the shorting attack on European banks. For him to say that there's no chance of a recession or no recession in Europe is absolutely laughable, and he really should be back in Europe, not sitting in Australia.
Meanwhile, gold stocks rallying again.
Yes, a big trend on there. Unfortunately, every time gold's up, the share market's down. It's really turning into a haven now, not just a hedge against inflation. The market getting concerned about counterparty risk again, interbank lending, everything that drives gold up. And gold shares were the notable outperformer today again. All
right, well, let's go to a couple of companies. And coal haulage rail company QR National has signed up to a sizable joint venture project at Gladstone. How significant is that?
Well, that's important, actually, and the stock did reasonably well in a terrible market today. Wiggins Island, the market was waiting for confirmation of the rail link to Wiggins Island to be built. $900 million deal involving a variety of existing and wannabe coal companies. Look, it was a positive for QR National today, but you've got to take it into context that transport infrastructure stocks like Transurban and MAP airports were also strong today as the market looked for places to park that were defensive.
Well, still on coal, Macarthur Coal has issued its formal response to the takeover offer from Peabody Energy and ArcelorMittal. It's not entirely ruled out, though, a better offer, has it?
No, it hasn't. It was quite an interesting takeover response today. And of course, the press is full of stories about counter bidders for Macarthur Coal, including consortiums involving CITIC, the existing shareholder, and Noble Group. Look, it seems even the board of Macarthur Coal knows there could be another player here, but they're hedging their bets by recommending the current offer from Peabody and Arcelor. So probably a little bit more to come in this one.
Charlie Aitken, thanks again for joining Late Line Business.
Thank you, Tiki.